There is a conversation happening in the ISO 20022 community right now, and it is almost entirely about four assets: XRP, XLM, HBAR, XDC. And those four deserve every bit of attention they get. But there are three more assets sitting in the same ecosystem that almost nobody in this community is talking about with any depth. And the reason they are not being talked about is not that they do not deserve it. It is that understanding what they actually do requires going one layer deeper than most people go when they research ISO 20022 assets. QNT, XDC, and Flare. Three completely different roles. Three completely different institutional pipelines. Three completely different reasons why the 99% who dismiss them as generic altcoins are looking at the same assets from the wrong angle. Let's go through each one, and let's be specific, because vague ISO 20022 association is not a thesis. Specific institutional deployment is QNT first, and this is the one that most confuses people who have not spent time with it, because quant looks expensive. QNT trades at approximately $75 with a market cap of roughly $900 million. That is a higher price per token than most ISO 20022 assets, and people see $75 and assume they missed it. They did not. Quant was designed from the ground up to speak the ISO 20022 language fluently, which puts it in a solid position as more financial systems move towards standardized messaging. But here's the specific thing about QNT that makes it different from every other asset in this ecosystem. It is not a settlement rail. It is not a payment network. It is an interoperability layer. Its flagship product, Overledger OS, acts as an API gateway that connects over 45 public and private blockchains, including Bitcoin, Ethereum, Hyperledger, Fabric, and emerging CBDC networks, without the security risks of bridges or wrapped assets. Without the security risks of bridges. That specific claim is the most important technical property of Overledger in the context of the institutional adoption story. Every major blockchain bridge hack in history happened because bridges introduce new attack surfaces. Overledger does not bridge assets. It creates a communication layer that lets institutions interact with multiple blockchains simultaneously without moving assets through a vulnerable intermediary. That is the property that matters for a bank that needs to interact with both a permissioned settlement network and a public blockchain in the same transaction workflow. Quant has recently taken part in the European Central Bank's Digital Euro pilot, a program that is expected to run through 2026. The project also works alongside major firms like Oracle and Deloitte, showing growing interest from large institutions. The ECB Digital Euro pilot, Oracle, Deloitte, and then the two announcements that landed in 2026 that most people missed entirely. Great British Tokenized Deposit Project completion in mid-2026 is the live rollout of a regulated tokenized sterling system involving major UK banks. Fusion Rollup Multi-Ledger Network launch in June 2026 is the deployment of a unified execution layer connecting 74 blockchains for institutions, and 74 blockchains connected through one unified execution layer in June 2026. And the Great British Tokenized Deposit Project completing in mid-2026 means a live regulated tokenized sterling system involving major UK banks is going into production on Quant's infrastructure. Before we get back into today's video, I just want to take a second to thank all of my subscribers. I truly appreciate each and every one of you, whether you've liked a video, left a comment, shared the channel, or you've been with me from the very beginning. Your support means more than you know. Because of you, this channel continues to grow, and I couldn't do it without you. Now it's time for our subscriber of the day, Kathy Ransbottom. Kathy, thank you so much for subscribing and for being part of this amazing community. I really appreciate your support, and I hope you're having an awesome day. If you're enjoying the content and you haven't subscribed yet, go ahead and hit that subscribe button. It really helps support the channel, and I'd love to have you join the community. And if you're interested in joining my GC rig arbitrage trading team, just leave a comment saying team below this video, send me a message on WhatsApp using the links in the description, or sign up directly using the link below. Alright, with that said, let's jump right back into today's topic. HSBC and Barclays tokenized deposits on Overledger this month. In April 2025, Quant introduced QuantFlow, which lets institutions automate payments and build compliance-friendly workflows. Compliance-friendly workflows, automated for institutions. In a world where the November 2026 ISO 20022 mandatory deadline for domestic payments with a cross-border leg is 9 months away, a product that lets institutions automate compliance. Workflows across 74 blockchains simultaneously is not a nice to have. It is the operational infrastructure that determines whether an institution can comply with the deadline without rebuilding its entire technology stack. The token's outlook is heavily supported by its critical role in the UK's tokenized deposit pilots with giants like HSBC and Barclays, and the highly anticipated mainnet launch of Overledger Fusion expected later this year. These enterprise-grade developments position Quant as a key infrastructure play for the year ahead. QNT at $75, with HSBC and Barclays running tokenized deposits on its infrastructure, with the ECB digital euro pilot, with Overledger Fusion connecting 74 blockchains, with QNT staking implementation in 2026, adding a yield dimension that institutional treasury departments can model. The 99% see a $75 token and think expensive. The 1% see the institution that the ECB chose for its digital euro pilot and that HSBC and Barclays chose for their tokenized deposits, trading at a $900 million market cap. Now, XDC, and this one has the most underrated milestone in the entire ISO 20022 ecosystem that nobody in the mainstream conversation is talking about loudly enough. Tokenized assets surpassed $1.1 billion on July 1st, 2026. This milestone underscores institutional adoption in trade, finance, and real-world asset tokenization. CertiK joins as institutional validator on June 28, 2026. $1.1 billion in tokenized assets on July 1st, this week. And CertiK, one of the most respected blockchain security audit firms in the world, joined as an institutional validator 4 days ago. XDC's partnership with Bitso Business has established a blockchain-based remittance corridor between the US and Mexico, leveraging ISO 20022 standards to facilitate near-instant USD to MXN conversions at minimal fees. XDC's tokenized US Treasuries and private credit instruments have attracted over $16 billion in active loan values. $16 billion in active loan values. That is not a small number. That is the trade finance use case in production at a scale that most people in this community have never heard quoted. XDC is solving the $15 trillion trade finance gap. The gap that exists because small and medium enterprises cannot access trade financing through traditional correspondent banking infrastructure because the documentation, credit assessment, and settlement process is too slow, too expensive, and too opaque. In May 2025, XDC made a series of strategic plays that turned heads inside regulatory and institutional circles. UTLA integration opened institutional doors by offering secure, MPC-driven custody of XTC assets. UTILA's $8 billion monthly processing volume makes this an instant trust signal. Elliptic support added enterprise-grade AML and KYC monitoring and wallet risk analytics, essential for banks, hedge funds, and governments looking to participate. Joining the MiCA alliance gave XTC a voice in shaping Europe's markets and crypto assets framework, positioning it as a pro-regulatory partner. That phrase, MiCA alliance membership, elliptic, AML, and KYC integration, UTILA MPC custody with 8 billion monthly processing. These are the compliance credentials that every institution considering trade finance tokenization needs to see before they put their name on a blockchain deployment. XDC Network's unique enterprise-grade hybrid architecture, ISO 20022, compliance and growing list of institutional partnerships in trade finance as a long-term value proposition. The hybrid architecture is XDC's specific technical differentiator, public for transparency, private subnets for compliance-sensitive institutional data. That combination gives banks the accountability of a public ledger and the privacy controls they need for confidential client transaction data, and XDC built that architecture specifically for the trade finance use case years before the institutional conversation about hybrid blockchains became mainstream. XDC at 3 cents with $1.1 billion in tokenized assets, $16 billion in active loan values, partnerships with CD, HSBC, and Standard Chartered through the Contour network. Acquisition. CertiK as an institutional validator, Elliptic AML integration, MiCA alliance membership, and the Cancun hard fork in January 2026, aligning XDC with Ethereum's latest technical standards for better dApps. Compatibility, the 99% see a 3-cent token and think irrelevant. The 1% see the trade finance blockchain that just crossed 1.1 billion in institutional deployment, trading at a market cap that implies the market still hasn't registered what 1.1 billion in institutional deployment actually means. Now, Flare, and this is the most technically specific of the three, and the one that requires the clearest explanation because its role is genuinely different from anything else in the ISO 20022 ecosystem. Utilizing an ISO 20022 compatible architecture, Flare serves as a compliant data hub linking networks like XRP Ledger and Bitcoin to traditional institutional clearing systems. A compliant data hub, not a settlement rail, not a payment network, not a trade finance blockchain, a data hub, and the specific data Flare provides is the most critical missing piece in the entire ISO 20022 settlement. Architecture, real-world price feeds, external event verification, cross-chain state proofs, all of it provided to smart contracts natively at the consensus layer without relying on centralized Oracle providers. Flare is a full-stack EVM-compatible Layer 1 blockchain explicitly engineered for data-intensive use cases by enshrining core data acquisition protocols directly into its network consensus layer. Flare eliminates the security trade-offs, high costs, and latency constraints associated with third-party off-chain Oracle networks. In the 2026 digital asset ecosystem, Flare has emerged as the structural backbone for XRP decentralized finance. The emerging ecosystem of financial products built on the XRP ledger that require real-world data to function, price feeds for collateral, valuation, interest rate data for lending protocols, exchange rate data for currency swaps, All of it needs to come from somewhere reliable before a smart contract can execute a financial transaction without human intervention. Flare is where it comes from. As of 2026, the network is in the final phase of that schedule, where inflation is capped. New FLR issuance is limited to a maximum of $5 billion per year and is calculated only on FLR that has already been distributed, not on the total supply. The higher issuance rates used during the first 2 years of the network were designed for early bootstrapping and have now concluded because the annual issuance amount is capped. Inflation rate is ever decreasing and will approach zero over time. Flare drops concluded on January 30th, 2026. The 36-month distribution schedule finished, the bootstrapping phase is over, and what remains is a network in its operational utility era with capped inflation, a deflationary burn mechanism, and the role of structural backbone for XRP-Fi in 2026. Flare has already burned over 66 million FLR as part of its deflationary plan. 66 million burned from a supply that was already reduced from 100 billion to 15 billion through FIP01, and every transaction fee on the Flare network burns more. This is the tokenomic shift that happens when a distribution-heavy bootstrapping phase ends and the network enters its utility phase. The inflationary pressure from airdrop distributions disappears. The deflationary pressure from fee burning continues, and the demand from data consumers, the DeFi protocols, the XRP-Fi applications, the institutional clearing systems that need verified external data starts building. The 99% see Flare as an XRP airdrop token that has underperformed since launch. The 1% see the data infrastructure layer that is entering its operational utility era with capped inflation, a deflationary burn mechanism, and the role of structural backbone for XRPSI in 2026. Now let's connect all three to the same ISO 20022 picture, because QNT, XDC, and Flare are not random altcoins that happen to mention ISO 20022 in their marketing. They are three genuinely distinct layers of the same infrastructure stack. QNT is the interoperability layer, the API gateway that lets institutions interact with 74 blockchains simultaneously, without bridge risk. The ECB's digital euro pilot partner, the network that HSBC and Barclays chose for tokenized deposits, the infrastructure that connects the ISO 20022 messaging environment to every blockchain simultaneously. XDC is the trade finance settlement layer, the hybrid blockchain that solved the $15 trillion trade finance gap, the network with $1.1 billion in tokenized assets as of this week, the platform with $16 billion in active loan values, the infrastructure that Citi, HSBC, and Standard Chartered are building trade finance applications on. Flare is the data layer, the compliant data hub that provides real-world price feeds, external event verification, and cross-chain state proofs to the smart contracts running on XR, Key, Ledger, Stellar, and every other ISO 20022 compatible network. The structural backbone for XRP PHY in 2026, the network entering its operational utility era with deflationary tokenomics after completing its bootstrapping distribution phase. 3 layers, 1 infrastructure stack, and the 99% are not talking about any of them with any depth because the community conversation has been almost entirely about XRP, XLM, and HBAR. Those 3 are absolutely the right assets to hold. They are the most validated, most institutionally deployed, and most regulatory clarified assets in the ISO 20022 ecosystem. But QNT, XDC, and Flare are the 3 infrastructure layers that make the settlement rails the compliance architecture, and the real-world asset tokenization story of XRP, XLM, and HBAR actually function at the level of complexity that institutional finance requires. The ECB chose QNT for its digital euro pilot. HSBC and Barclays chose QNT for tokenized deposits. Citi, HSBC, and Standard Chartered chose XDC for trade finance. And the XRP ecosystem chose Flare as its data infrastructure backbone. None of those choices appear in the mainstream crypto conversation because none of them produce the kind of retail-driven price action that dominates headlines. But institutional infrastructure decisions do not need to produce retail price action to matter. They need to produce production deployments. And all three of these networks are producing exactly that right now. If this video introduced you to the three ISO 20022 assets that nobody in the mainstream conversation is explaining with the specificity they deserve, hit the like button right now. That signal pushes this to the ISO 20022 community that has been focused on four assets without understanding the three infrastructure layers that support them. Subscribe, because when QNT's Great British Tokenized Deposit Project completes in mid-2026 and XDC's institutional validator ecosystem expands, and Flare's XRP-Fi data infrastructure generates its first visible transaction volume data, this channel will be the one that already explained what each of those events means. And drop a comment with this. Out of QNT, XDC, and Flare, which one did you know the least about before this video, and which one surprised you most? That debate tells me exactly where the community's research depth actually is on the assets nobody is talking about. Share this with whoever in your circle thinks they know the entire ISO 20022 ecosystem. They are probably missing three of the most important pieces. Have a great day. If you enjoyed this video, don't forget to like, subscribe to the channel, and be sure to join my free Telegram community with the link on my channel where I post my daily crypto experience and arbitrage opportunities you can't get anywhere else. This is XRP Hober signing off.